The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the May 26th terrific Tuesday edition of Hour 2 of the Trader's Edge. Thanks to Larry Pesavento for taking over for Hour 1 this morning. I'm your host, Steve Rhodes, and I'm absolutely thrilled to be with you this morning. I hope you had a wonderful weekend out there. Let's make sure that each of us do everything we can to have an extraordinary Tuesday. Of course, we had a nice long weekend, so all of our batteries should be recharged. The batteries have been recharged inside the markets out here, and right now it's the sellers who really recharged over the weekend. We've got the Dow off 127 points. The S&P is off 14. The composite is down 44 points. I'm absolutely grateful for your presence here this morning. If you've got a question, I'm here to serve you, so feel free to call on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, thousands of others have got that exact same question. So what better way to start your day than a random act of kindness? Call in for somebody else out there. This is Terrific Tuesday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow off 131, as I say, the S&P down 14, composite off 45, Russell 2000 off 14 points. The DAX is down 169 points. The FTSE's off 45. Goldilocks is back 16 bucks. Silver's off 26 cents. Light sweet crude is back about $1. Leading the charge to the upside this morning, it is GeekNet up $9, up 116%. Maybe a buyout out there, I would imagine. Time Warner Cable, that's up $7.44 after the offer from Charter. You've got Bluebird Bio. That's up 268. We've got, what else do we have out here? A lot of pro shares. Ryanair Holdings up $1.82. To the downside, Google's leading the charge dollar-wise, $8.51. Shake Shack is off $5 this morning. Regeneron Pharmaceuticals off about $6. Alexion Pharmaceuticals off $4.84. Amazon down $5. Esperion Therapeutics off $3. Biogen off $4.60. Boy, that IBB must be taking it in the shorts this morning. All right, so let's go right to the markets, and let's try to, first let's figure out where is it that the markets are headed to. We'll go back and take a look at the ETF structures here in a moment, but we're going to switch over and take a look at the futures contract. So when we take a look, this is the S&P futures contract that we're looking at right now. And I'm going to switch over. Let's take it. So we've got really 4 time frames out here. Upper left is 30-minute. Center upper is the 60-minute. Upper right is the 120-minute. Lower left, 240. Lower center, 300-minute, 5-hour chart. And lower right, the daily chart. Where price is likely to head to next, if we take a look at the daily chart first, inside the ES Mini, it's likely to head back to the resistance area of the top of its TAS market profile box out there, 2,099. Does price have to stop there? Absolutely not. But that is the first area where we're going to get some type of feel for, now this is a wide-ranging bar that's already in place as we speak right now. A lot of time left in the trading session. But the first area of support is going to be that level. Now I'm going to switch back here to the 120-minute time frame chart. Here's what we know about the 120-minute time frame chart for the S&P futures contract. Had a nice little rising price channel that was in place. We saw a close below this. This was on Thursday of last week. I believe it was Thursday. Was it the 22nd? Maybe that was Friday. Yeah, it was Friday. It was Friday, and that was at about 2 o'clock in the afternoon. It was really subtle out there. We saw price try to get back inside that level. Was never able to do that. That was on Monday, as the stock markets were closed, the futures market was open. Price was trying to get back in there, couldn't do that. So we know we've got a change in trend. We take a look at the S&P futures contract, looking at that 120-minute time frame. Now, as long as we're over here, let's also go take a look at retracement levels. Those retracement levels off of the swing point down here from about between 4 and 5:15 in the afternoon on May 7th. So we're going to go from that low to the high out here, and that's on the trading session. Looks like at about between 2 and 4 on May 19th out there. Well, we can also see at this 2105 level. Remember, the daily gave us a price objective of what? 2099. So between 2099 and 2105 is the first area of potential support for the S&P futures contract. Let's see what happens as price gets down there. It may take place during this next 45 minutes. Of course, you're going to see what takes place during the entire trading day. If those levels fail, meaning we see a close below that daily number. So that's at the 4 o'clock time. Well, really 5:15 is really when you would be looking for it. Then what you're likely to see is a move down to about the 2086 area. That's just your 0.618 retracement. That would say there's nothing wrong. We'll get some of that scary bottom kind of a feel going in. People will be throwing in the cards, and I'm suggesting you don't throw in the cards here just yet, not inside of the indices. So that's what's going on as we take a look at the futures market. Let's switch over here real quick. We can see that prices below every level of support when we take a look at those market profiles, with the exception of the daily out here. Now, that crack inside the daily, by the way, at the 2099 level, let's expand that screen up. If we were to see a close below that, then you're looking at 2084 to 2053 as the run to the downside out there. We got to take this one step at a time. Now, let's go take a look at the strong market out here. Let's go take a look at the NQ. Of course, it's probably not so strong as we speak right now. Now, inside the NASDAQ, and we're going to take a look at the 120-minute chart as well, we can see that, too, had a nice little rising price channel out here. And if we take a look at it, I think Larry coined it the 20-man trend line or something like that. I just caught a portion of the show. That really basically is look, when you break a rising price channel, what we like to see price do is to try to get back in, and if it gets back in, says the trend is still back in play. If it rejects it, it says that trend is over with. Well, we take a look at price breaking through here. This was this morning, or last night, I should say. At about between 10 and midnight, we saw price actually break through that rising price channel. Then what do we see here as we came on at about 2 o'clock, between 2 and 4 o'clock this morning? We saw price try to get back in there. It rejected that level. Now it's moving lower. If we take a look at retracement areas inside the NQ, if we go from the low out here, that's low on May the 7th. To the high. Now, its high came in here on May 22nd. This was on Friday between 12 and 2 in the afternoon. We can see that its 0.382 retracement level is 44.63. Let's come over, take a look at the daily chart. 44.62.90. So 44.63 is its level of support. So when we see, so you're at 44.80. Pretty darn good chance you're going to see another 20-point move down inside the NQ. You're likely going to get that move down here this morning or today. We don't have to, but you're likely going to get that. And if we get that and that level holds as support, then we need to see what kind of volume, we need to see what kind of bounce there might be, what kind of patterns might be setting up inside there. If we go back to that 120-minute time frame chart, there is no Gartley pattern really to speak of. You'd really have to be stretched to come up. I mean, I could come up with an A to B equals CD to the downside if I needed to, but let's watch the bars as they approach that area. And I suspect we're going to see the NQ. Now, if it breaks through those levels, let's go back to the daily chart out here inside the NQ. Then we'll go take a look at ETFs, currency pairs, gold. We have a lot to take a look at this morning. If we see a break below that 44.62 level, price ought to make its way down to 44.16, 43.70, and a change out there. That's what's going on inside of the NASDAQ. Now, if we take a look at, first, let's go take a look at what's going on inside of the VIX index. I believe it's over 10% so far. Yeah, it's up $2 today. It's traded at 14.16. It's up 16% out here. If we go take a look at the VIX index, it is above the 50-day exponential moving average. That price point is 13.78. That's going to be a number that you're going to want to key in off of for sure out here, because real carnage in the markets are done when the VIX is trading above the 50-day exponential moving average. It doesn't care what the price level is at. The price has no meaning. Where price is in relation to the 50-day exponential moving average is the absolute only thing that you need to focus on and pay attention. Now, we saw that it was already a 16% one-day rate of change out here. We're not done. I don't know what the end of the day is going to look like, but if at the end of the day it's above 10%, expect a bounce within 48 hours, likely within 24 hours, at least in the futures market out there. So if the market ends horribly, and so I'm just setting you up for tonight, so you end early in the morning. If, in fact, the market ends horribly today, which it really could, And it depends on what it is that you're trading. You should be expecting some type of bounce, some type of little relief bounce out there versus a low at this stage of the game. You should be looking at some type of relief rally that might take place in the overnight hours or early morning. Doesn't have to, but I tell you, 90% of the time it does, and it has done that for the last several years out there. It's more than like 70% of the time if you take a look at it since the VIX index came on the marketplace out here. So it's got a really good percentage possibility when that takes place. If we take a look at the summation index for all three of the indices out here, the New York Stock Exchange, that's the left-hand side. The center portion is the NASDAQ Composite, and the right side is the Dow. All of them, sellers are absolutely in complete control, and that took place on Friday. Sellers took control of the market inside the New York Stock Exchange and the Dow. The NASDAQ did not, but today, that's a whole different story out here. So sellers absolutely in control of these marketplaces. You didn't need me to tell you that. You already knew that this morning by taking a look at what was going on inside of the markets. Look, this move down is a little bit different than what we have seen in the past week or so, because we now have those price oscillators down below the zero line. So that is something that you absolutely need to be paying attention to. So that covers where we think the markets are headed. Let's go check in on the currency pairs. Doing this a little bit reverse order out here, but that's what needs to be done in order to really get you up to speed on what's taking place. Now, of course, the euro versus the U.S. dollar. Let's take a look at that. What you and I both know is that it tried to bust out of that descending price channel. It did for a matter of 2 days, came back inside it. When you come back inside a descending price channel after testing it, it says that breakout was a failure, an absolute failure, flawed failure. No flaw in that failure out here. This says that price is headed to the 0.618 retracement level. Well, shoot, it's basically already hit that today at the 108 area. The looks like the euro could easily make its way back down, not just to the April 13th lows, but why not head back down to the bottom of the rising price channel, or the descending price channel. This is Steve Rhodes with TFNN. Dow's off 161. We'll be right back. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 159. S&P is down 17. So we mentioned the euro currency pair. We know that's coming up against an area that can act as support. That's a 0.618 retracement level off of the low out here from April 13th to the high that was put in on May the 15th. If that level fails, price will head down to the 0.786 area. That's right around the 107-ish mark. And that gets you so low to the swing point from April 13th. It's very likely a 100% move of a move that you would see take place there. And that's what's going on inside that currency pair. If we take a look at the euro, Japanese yen, whole different scenario out here. Remember, the euro is the numerator, the Japanese yen is the denominator. So we're going to go take a look at the denominator out here in a moment. We're seeing a nice little key, not a key reversal, an outside day session, bullish engulfing as we speak right now. This has barely pulled back. If we take a look at its retracement level from a low to high out here, we take a look at that. It has not even made the 0.382 retracement area. Now, there was a key reversal session inside of this currency pair that took place on May the 18th out there. And you got some follow through on the following day on May 19th. So, we've seen some work, but not even a 0.382 retracement to the downside. If that high gets taken out, and that high is the May 18th level at 136.96, it'll be a clear signal that the move to the upside in the markets is not done. So we want to be paying attention to what goes on inside this currency pair over the next couple of days out here. If we take a look at what's going on inside of the Japanese yen, we're just going to keep it very simple when we take a look at these markets out here. We've got tools and patterns and indicators that let us say, let's just simply check our beliefs at the door. What are the patterns that are in place telling us? If we go take a look at what's going on inside of the Japanese yen versus the U.S. dollar, this thing is a rocket ship. If we take a look at it, it's taken out its B point. It is done with a wide-ranging bar. We don't have volume on the currency pairs. That's why we pay such close attention to what's going on with inside the candlestick, because that tells us a ton about the marketplace. What do you have today? Wide-ranging bar, taking out the B point, which was from the March 10th level. That says that price is going to march on its way up to 124.50. Pretty darn good chance that price is going to head up more towards like the 126.18 level. We have about a $4 move. $4 on top of 121 takes you to 125. That's a consolidation area that the Japanese yen versus U.S. dollar have been trading in. That is a breakout above resistance in a number of different fashions. So this Japanese yen wants to move much, much higher out there. It has gotten into that extreme overbought condition, but it still wants to make that move higher. If we take a look at the Great British Pound, go check it out, see what it's doing out here. Great British Pound still has an A to B equals CD to the upside. That is in place out here, but it's going to be maybe two or so. If we take a look, when I say two or so, the first one is the one that took place on April 13th. That was your A point, your B point, April 29th, your C point, a little retracement, 40% retracement into May 4th out here. 1-to-1 takes you up to the $1.60 level. But we had those nice, 8 days in a row or so to the upside out here, taking us to that May 14th level. If we just simply take a look at retracements off that C point, May 4th, into the high out here on the trading day of May 14th, you can see that it has made a 0.618 retracement level this morning. Could be an area where it turns. If not, if this area fails, you're looking at $1.52 out here as its next move to the downside. Of course, you've got a weaker euro. You've got which putting strength in the U.S. dollar. You've got a Japanese yen against U.S. dollar that's moving higher. That is putting strength inside the U.S. dollar. You've got a pound that is pulling back. Because then you wonder that the U.S. dollar index is up $1.20 as we speak right now. Really, for me, it's much easier just simply to take a look at what's going on inside those currency pairs versus the U.S. dollar index, because this is nothing more than a derivative of what's inside of it. And what's contained inside it is that euro, is the yen, is the pound, is the Canadian dollar, is the Swiss franc, and is the Swedish krona out there. At this stage here, we can see that the euro, the pound up against some fairly significant potential support levels, those 0.618 retracement areas. If we see those areas hold, you would see the U.S. dollar index likely pull back. Depends on what kind of continued weakness there is inside that Japanese yen as it tries to motor its way higher. Let's go take a look at Goldilocks out here. We've been saying inside Goldilocks that we have not been impressed at all for the longest period of time because it's not been able to take out its consolidation, which is at the 1224 level. Well, it's going to head to the bottom of the consolidation around the 1180 area, maybe down to about 1180, 1170, 1168 or so. That's the most recent swing point back here on May the 1st. Let's go out to Orlando to Rich. Rich, thanks for calling. Thanks for holding. How you doing this morning?
Doing wonderful, Steve. How about yourself?
Excellent. Thanks so much for asking. Did you have a nice Memorial Day celebration?
Yeah, it was very nice. It was just nice weather and just had a nice time. We had a little rain yesterday, but other than that, it was a really nice week.
Excellent. Rich, do me a favor. Hold on through this break. When we get back, we'll go take a look at DGAZ. I'm thinking that must be a natural gas. We'll come back to you just as soon as we get back from this break.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 154. S&P is down 17. Natural gas back 8 pennies right now. We're going to go out to Orlando, speak with Rich about natural gas. Rich, are you in this short trade of natural gas, DGAZ?
Yeah. See, what I trying to do is to play the two, the UGAZ and the DGAZ. And right now I'm currently in the DGAZ at about 550. So I'm on the plus side. The real question is, what does natural gas look like? And I'm not sure if it's just kind of moving within a range here between the 307 and the 250, or is it really kind of making sort of an ABC up, but it might be stretching a point. So the real question is, what is natural gas doing, and then playing the DGAZ accordingly.
Okay.
Right now, I'm in the DGAZ right now.
Got it. Okay. Well, good. That's great. A nice trade by the way. And so let's try to answer those questions. And first thing, let's start off by taking a look at the current contract for natural gas. We know we've had a nice move off of the bottom back here, April 27th, all the way up to the high out here on the trading day of May 19th. Now, as that high was being made, formed a nice little key reversal session. A nice little bearish engulfing, little follow through the very next day. If we just start out and take a look at its market profile highs out here, this would, the market profiles, I should say, what this says to you and I is that price is likely to pull back to the $2.74 area. Of course, the problem for you is we don't know when that's going to take place. If that's going to be during market, during market hours or not. But right now, we're not there. That's still a pretty decent move to the downside from where we're at. And it looks like that would be one place to keep an eye on to see if that level will hold as support. Theoretically, it should hold as a support. If we just simply take a look at these TAS market profile boxes, if you take a look at the bottom, the level that I'm looking at first is just the green horizontal line going across my screen. See how each of these are forming above each other? It really tells us that there's a buying impetus in place. And not until we see a failure here or we see a lower set of boxes set up here does it suggest that maybe something else is up. So that gets back to your question, is this really just setting up an A to B equals CD? Is this just setting up the C point? And at this stage, the information that we would have would suggest that you're right on there, that that's exactly what it looks like it's doing. And therefore, you'd be looking for natural gas to pull back in about the 271 to that 274 area. That's what it looks like as we take a look at this chart. If we take a look at just the natural seasonal pattern inside of natural gas, that also really suggests the message that we're looking at here normally. which is this, that natural gas typically puts in a low during the early part of April. And this year, it took a lot longer. Whoops, didn't mean to do that. Meant to get back here. Come on, do me a favor. Don't do that. There we go. Okay. Sorry about that, folks. Hit one button too many. So natural gas typically forms a bottom in the early part of April. This time it was pushed out just a little bit further, and then natural gas runs higher into the middle part of June out here. Typically, if we were going to try to guess a day, it's around June the 18th. So this also, when we take a look at what its natural behavior has been over the last 11 years, it then suggests that A to B equals CD pattern that you mentioned, and we take a look at these market profiles, that's more likely the pattern that is in play out here. Does that help you understand, at least our thinking on what natural gas?
It does, because my question would have been, is it an A to B to B to C forming, or is it just going to travel between the range of 250, 255 and 308, I guess was the high, or 309?
Yeah.
And so the real question is on the pullback, is that we're getting closer to it with the 271, or would you kind of expect it to get down into the 260s, to high 50s? You follow what I'm saying? Is it traveling between that range, or is it pulling back for an ABC to move forward, which it sounds like is what you're alluding to, is that it looks like it's forming up an A to B, B to C, or A to B, B to C, for that portion of it.
At least that's the information. I think that's the information that is available to you and I as we speak right now. I don't think we have any reason to believe otherwise at this very moment. That doesn't mean that things won't change out here. Go ahead.
I
didn't hear.
My question of the DGAZ, is it just about as far as we can expect it to go? So it's maybe time to say, all right, time to move out of it. Or, what is still the potential? It's 603 right now, or I forget what it's trading right at the moment, but I think it's like 603, 604 is what my screen is showing.
Yeah, let me put DGAZ up on the screen. I think it's too early to jump into the UGAZ. So right. if you're trading both and you're going in one and out of the other. Correct. Then I would answer it this way, and it would look like to me that DGAZ still has more room to the upside. But I wouldn't want to flip those positions until I saw price move back into the support area of either the TAS market profile or the 0.618, and then maybe take a look on an intraday chart to see if there's some kind of wave setup or some type of pattern. Maybe there's some type of A to B equals CD. That was right. some other type of pattern out here.
But that is the quandary that I'm in right now. Is that what do we do with the DGAZ?
So a couple of different things that you could easily do. One, it's never bad to take a profit, so in your profit position. So that's one you can always take a look at. Two, you can always get into a position where the only thing riding on the trade is your profit, so you get back all of your principal, and that makes the decision a whole lot easier with regard to timing it.
So take out your original money, you mean?
Yeah, get your original money back on that trade, and then what's left in there, the number of shares, that basically, you're in a 100% profit position. That would be another thing. I would say, just looking at the DGAZ chart, what you and I would be looking for is we'd be looking for this to get up and tag $6.51. So if we didn't understand that this is nothing more than something that the underlying instrument is the natural gas contract, you and I would look at that big move down from April 30th with 26 million shares and say that price ought to get up and tag the low of that, which is 651, and you're at 603. So then you can do the math, the risk reward analysis on that portion of the trade too. But at this stage, everything suggests that we see natural gas continue to pull back a bit here. And I apologize, I didn't do any work on natural gas and the CFTC commitment of traders data over the weekend, so I don't even know what they're suggesting to us. But I think we have a good handle. It's just how do you monitor this trade when you're not trading the futures contract is really the issue that you've got to deal with. So does that? I want to make sure. I like to.
It does, because it's the old thing about bulls make money, bears make money, pigs get slaughtered. I'm looking for. My original thought is that maybe it's into the 689, 690 area, because that's kind of where the last high was at. But I myself feel that that's a stretch from here. So
and do you want to see if you were thinking it might get into 690?
Well, that was when you look back. I forget the last time it was up here. It was what else? I'm sorry, but
No, I mean that could,
yeah.
690.
yeah,
Yeah,
688 back in early May. It was at, and we were, and at least that's what the
Yeah.
chart that I'm looking at shows.
absolutely. Yeah, May 7th. You're looking at May 7th.
Right. So I was thinking that, well, maybe it'll touch that or just come approach that, or I guess it's a 200-day moving average at 696. But in all honesty, I look at that saying that's you're looking for too much at this point, and that's why if you've got a nice accumulation there at that 650-ish level, 645, 650. So that might give some resistance. That may well be the target area that it would take a breath at.
Let me just see what. Let me just go to a short-term chart here on natural gas. Let me just see what we have here on the 120-minute time frame chart for natural gas out here. See what we see, if anything. So natural gas right now. There was a breakout session that looked like it occurred on May 8th between 8 and 10 in the morning. And the volume there was pretty decent. Looks like about 51,000 contracts. That looks like about the highest volume day to the upside. We haven't seen anything from a contract standpoint. Prices pulling back pretty nicely with light volume. So, this just really, really enforces that the price would pull into 271 to maybe 273 to 276. That seems to be more likely the outcome that we're looking at here as we speak right now at 1043. So,
and that'd be about 10 cents lower than where it is now.
Yeah, but I don't see anything other than we know that price is moving back into some volume back there, and we haven't seen any really big volume decline other than up at the top. We did see it on that trading day that created that key reversal session, which was May 19th, and all that selling took place between 10 in the morning and 12 noon. Other than that, we haven't seen a lot of volume to the downside. Just on a 120-minute time frame chart.
Right.
120-minute time frame chart shows that it's in the oversold condition, so things could slow down here. My inclination is to say that price could pull back into those areas, and hopefully it does just simply during trading hours if you're still in the trade. What I can say, and I just reiterate, I don't see the reason to take the long side of this trade.
Right. I tend to agree there. It's too soon for that.
Yeah.
But it's really in my situation, that's the moot point at this point. It's more of a question is what to do with the short side of it.
Yeah. That's the best I can come up with. I hope that helps out.
That clarifies the situation some. I appreciate it. Thank you.
Oh, my pleasure. Thanks for calling. That was Rich in Orlando. Together, we were ripping apart really the natural gas contract, and then taking a look at the which is the underlying instrument to the 300% ETFs that he was trading out there, and that's what you've got to do no matter what. If you're trading the Qs, you want to know what's going on inside the top 10 holdings inside there. If you're trading the Dow, you want to take a look probably at the top 5 or 6. I think that represent about 50%, 40% of the structure out there. If you're doing the energy sector, the XLE, you just need ExxonMobil, Schlumberger, Chevron, and you really want to understand what's going on inside of the ETF that you are trading out there. Now, speaking of those ETFs, we haven't looked at any of those, so let's go do that this morning. Let's take a look at the QQQ ETF. What do we know about it? We know that what it has done now, it has officially rejected the swing point from April 27. That swing point had volume of 31 million shares. Friday, obviously a holiday-ish type trading, only 13 million shares, one of the lowest trading, it was the lowest trading day in the Qs in 2015. Today we've seen volume of about 8.7 million shares. So as we take a look at it, we know we've got a rejection of that swing point. I'll go ahead and get rid of those blue lines out here on my screen. And this says, let's take a look at just natural retracements. We know price can always pull back to make that 100% move and get back and test the May 6th area. After all, price has been trading with inside a sideways range inside all these markets for a bit of time out here. That says that the price inside the QQQ is likely to pull back into the 107.86 area. It's gotten down to the 0.382 retracement, 109.01. We know that we should be, if the markets finish like this or worse, we know we should be expecting at least some type of bounce in the marketplace. It may be just a early morning, late night bounce in the futures marketplace. So you have to be careful there as to what we are looking at. But at this stage here, it does look like the Qs want to pull back. And I would say that the Qs, as well as the rest of the market, We'll know when there's a bottom in when we see one of those high volume bottoms that come in inside of the market. That's really a signature that you want to be looking for. Is you want to see big selling, big volume, where everybody at that stage is saying, okay, it's curtains out there like Jane Curtin. And the answer is no, it won't be Jane Curtin. What it will be is it'll be a buying opportunity out there. And that's one of the things you're going to want to look for inside of the QQQs after we see this, what is likely going to be a scary route to the downside. But anything can happen inside this market. If we take a look at the IWM out here, looks like the IWM has formed that C point of an A to B equals CD now to the downside, with that C point coming in on May the 20th. Price so far this morning trading out of 123.28. Real key levels for it to be able to bust through are going to be 120.24. It needs to clear the 121.29 level, and that swing point out there for that B point is May the 6th. 34 million shares there. We have seen a day where we've only traded for an hour and 17 minutes with 15 million shares. So you do have volume picking up to the downside. No idea what takes place over the course of the next 5 hours. But over the last hour and 15 minutes, we've seen a volume, pretty decent volume to the downside. So 121, 121.93, 121.29, and 120.24 are the areas to be watching inside of the Russell 2000, the IWM ETF. If we take a look at the SPYs out here, the SPYs right now getting back inside the lower part of its range out here. That is below the 212.24 swing point high from February 25th out there. Volume so far today, 32 million shares out here. The actual swing point high has 76 million shares. So volume picking up to the downside. We can see price now testing support of the top of its TAS market profile box, 211.15. And he closed below 211. Let me make sure. Is that right? 211.11 actually is the top of the box. We're trading at 211.15. And he closed below 211.11. That says we're likely to see price move back in the 207-ish area out there. That's what's going on inside of the SPY. Let's take a look at the Dow Diamonds. The Dow Diamonds off $1.67, down with 1.6 million shares. A couple days ago when they created that little bearish engulfing candle, leaves were falling off the tree after the little doji on May 19th out there. That high was formed on May 20th with 5 million shares. Again, you've done 1.6 million shares so far today. This says price pulls back into at least the consolidation-ish area, which is going to be between 178.61 to 177.25, maybe even as low as the 175.57 out there. So that's what's going on inside of the Dow Diamond. So let's see. We've taken a look at, we briefly began taking a look at gold. Then we went to Rich to take a look at natural gas. So we get back from this break. Let's go look at gold, light sweet crude, maybe a couple stocks that are moving and grooving. This is Steve Rhodes with TFNN. Dow's off 162. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 170. S&P is down 19. Composites off 53. Quick peek in on the gold again. Just to reiterate, nothing really major going on to the downside or to the upside with inside of gold. She has simply been trading within a its own version of a consolidation, anywhere between the price level, for the most part, typically around 1180 to 1224 out there. I don't suspect there's anything more significant going on. Coming back and testing the top of its descending price channel, that's a possibility out here. I don't see anything bullish on the gold side, but I don't see anything at this stage overly bearish inside of gold either. If we take a look at silver out here, silver a little bit different message, I suppose. It's trading out at $16.80 as we speak right now. If we take a look at its potential pullback here, its retracement level, it's only just below the 0.382 retracement area at 1694, so likely expect to move back to test the area where it had broken out at the 1642-ish range. We saw a decent breakout session inside of silver on May 13th, so expect that level to be tested. In the case of light sweet crude, off $1.20, I believe light sweet crude had broken through its rising price channel. We saw that out there. Now it's just really moving sideways. It's traveling in between. It's stuck inside its TAS market profile box between 57.94 and 60.95. So nothing really too dangerous out here inside of light sweet crude. Okay, so let's see if we can summarize what it is we're looking at inside the markets as we speak right now. Number one, the markets took a little bit longer to get this decline in order. Really should have started a week ago. It didn't. Okay, so it should have started like May 18th. What's today? 18th. Today's the 26th out here. So it started on Friday when we saw the price oscillators dip below zero inside the NYSE and the Dow out here. So that was the beginning of it. As you know, I had said that my expectation was that we were going to see a scary type of low, a scary type of bottom that takes place. You know, with the Dow now trading down 181 points at 1056, that seems like that is coming to fruition. So let's just kind of use Stevie common sense here. So because the market is doing what we're anticipating or expecting. So we're looking for a scary low. This isn't it just yet, but we're looking for that scary low, that scary bottom, just to freak people out and everybody to say, okay, the sell in May, you know, that thing has kicked into full bloom out here, only to have that rug pulled out from underneath them after that bottom is put in. Now, we'd like to see a big, huge volume day inside the QQQs. We'll see if we get that. These price oscillators are moving fast and furious down towards the over sold level. Looks like the Dow is going to be the first one down here. That typically takes place down around this 250 to minus 250 to minus 3, maybe minus 4 area. That's a pretty significant over sold level, and it's doing it rather quick out here. It's not enough to. And you can't just buy off of that. You need to take a look at other patterns out here, and it's really going to be the NYSE that will probably take our biggest cue from with regard to the bottoms coming in, with regard to it getting into that over sold level of its price oscillator out there. So we're not there just yet. We have a VIX index, most certainly that is above the 50-day exponential moving average, well above it. I know 1379, it's trading at 1430 as we speak right now. Anytime the VIX is above that level, you know, you can expect a real carnage. But of course, it's had such a one-day rate of change as we speak right now. That's up to about, 17.89% out here. Just expect, just when you see that little bounce out here, I don't believe that means that that it's over and that bottom is in, but anything can change. But do be expecting to bounce if the markets were to end like this or even worse today. So folks, stay tuned. It is Terrific Tuesday. Our man Basil Chapman is up next after Basil. Then we've got the options hour. We've got Daryl Martin, David White, Tom O'Brien, and Andy Heck to take it on home from 5 to 6. Have a terrific Tuesday, folks. Look forward to seeing you soon. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.